In May 2024, Pinnacle Bank Texas purchased the tallest building in Fort Worth, Texas, valued in 2021 at over $137 million for $12.3 million. That works out to $12.30 per foot. You'd think that Pinnacle was on a shopping spree, considering the same week it purchased a 4-building office complex for $30 million, which works out to $66 per square foot. No, Pinnacle isn't a savvy buyer. Those purchases were foreclosure sale credit bids. The amount of the bad loans on which the borrower defaulted, which means, for example, that no one else wanted to pay even $1 more than the bank did for a 1 million square foot office building. Inherent in commercial property foreclosure is the fact that the defaulting owner wasn't able to refinance its way out of the mess, a symptom of higher interest rates and of the concomitant difficulty in qualifying for loans. As you probably know, for a bank, foreclosing on real estate, especially non-performing real estate that eats cash, is like AIDS. Not only is there no cash flow in, there's cash flow out, and it endangers the bank's ability to meet its own solvency requirements and therefore risks the foreclosure of its own existence as a bank. And inside that mess is the fact that banks in a precarious solvency position cut back on lending to save their own skin. Further compounding that spiral is that lending is how banks make money. It's their actual stock in trade. According to the Mortgage Bankers Association, 20% of the $4.7 trillion of outstanding commercial mortgages, that's close to $1 trillion in mortgage value, will come due in 2024. It's likely that many of those loans will be unrefinanceable and therefore will end up bank-owned, pulling more banks into their own solvency, or should we say insolvency, trap. The combination of higher interest rates in general, plus the fact that stressed banks can't or won't lend, is leading to a credit crisis in general, and that includes for medical groups and healthcare businesses of all sorts, from ASCs to hospitals to, well, you name it. This is the virus that drove Envision Healthcare's Chapter 11 bankruptcy, Florida-based Cano Health Chapter 11 bankruptcy, and American Physician Partners complete liquidation. There are posts on the blog at weissbc.com on each of those other events. Physician practices, ASCs, and other small to medium-sized healthcare businesses, many of which have had only deposit relationships with banks or which have had relatively low lines of credit, need to actively work to establish true banking relationships with multiple potential lenders. There are strategic ways to create those relationships, none of which involve, quote, applying for a loan or are timed around the need to obtain financing. Reach out to me now. Let's discuss well in advance of any need how to implement what can be a life-saving strategy for your practice or business entity.